Let's get insights from Jonathan Barratt, Managing Director at Commodity Broking Services in Sydney. Jono, good to have you with us. Is this a knee-jerk reaction? How much of it has to do with the earthquake in Chile, given some of the other factors that my colleague, Alan Godkin, mentioned in his report?
Yeah, Haslinda, look, it is a knee-jerk reaction. And we'd expect something like this, and that 5% gain is something that I think whenever you do get a catastrophe like that that affects primary imports, you would actually see. I think really the key here in analysing the situation is the fact that the loss of inventory, loss of sort of infrastructure is probably to me one of the keys, and also the concern of energy, getting energy back to the mines. And if that continues for any length of time, then we will see an effect, a sustained effect on the price of copper.
Sustained, but for how long? Some suggesting that copper will climb for the next 4 to 6 weeks. Could copper continue to surge even longer than that?
Look, I think it is debatable at the moment. I'm quite optimistic towards the price of copper, but over the last couple of months, we're seeing these inventory builds in Shanghai on the LME, and that's sort of a contra in terms of seeing this build started to pick up, seeing the economy start to pick up. So that, in my sense, says that copper might not go as far. But in the face of that, you know, we've got potential for a weaker US dollar, and we've also got the spring construction and summer construction just about to kick off. Chinese traders have just come back from their New Year's celebration, so in the wake of that, you might get more of a sustained panic or sustained uplift in the price of copper.
Any other producers who can perhaps make up for the shortfall that we're seeing from Chile right now?
I don't think so, not so quickly anyway. I think it all takes time. And I think the market, we've had this shock, we've now got to really see whether or not anything's sustained, whether or not that production can continue. You know, some of the mines are coming back on board, others aren't. We're not quite sure of the full extent of the infrastructure problems. So at the moment, I think there is this gap in the market, close to 1/5 the size of the production. We've got that gap, and that's seeing prices better bid. I think we would really like to see some lead from the LME. Remember, Monday morning is a time when obviously there's not a lot of liquidity, and sometimes these moves are exaggerated. So I would like to see a little bit of lead from the LME when that opens later today to see if these prices are sustained.
Let's take a look at specific numbers. Taking a long-term view, where's copper headed? What kind of numbers are you looking at?
Yeah, Haslinda, as I said, we're quite optimistic on copper. You know, we actually see that demand will lift, particularly out of Asia, particularly out of China. 350 is the next target that we've got, and if we can break through that 350, then we can see prices head on up to around that 400. And I think given that imports of copper from China are up 34% from the same period last year, then I think that is something that's on the cards and certainly pointing to say that demand for copper will be with us, particularly out of China.
Jono, how about other metals? We see gold rising as investors turn to it as an alternative to currencies. We know that fiat currencies